Good evening, everyone. I am CA Ekta Jain, practicing chartered accountant from Bhopal. Today, I am the moderator of this webinar. We are delighted to welcome you all in the webinar being organized by CCLEA and NPO Committee of ICAI. It is my pleasure to be a moderator in Know Your Law Series 34 webinar on latest amendments in Multi-State Cooperative Societies Act 2002 on today, that is 9th November 2023 from 4 p.m. to 6 p.m. being organized by Committee on Commercial Laws, Economic Advisory and NPO Cooperative of ICAI. In a short while, we will start this webinar. I would like to apprise you about CCLEA and NPO Committee. This committee is focused to encourage chartered accountants to shape strategy and policy that unlocks economic, financial, and social value while combining analytical foresight with commercial acumen. One of the core areas of this committee is to serve the multifunctional task of analysis, knowledge dissemination, inputs to regulators on policy formulation, to develop and publish technical guidance, background materials, etc., and to create awareness for professional opportunities for chartered accountants in commercial laws, economic advisory, and NPO cooperatives. Our eminent speakers will talk on latest amendments in Multi-State Cooperative Societies Act 2002 in this webinar, and we hope that the same shall be useful to all the members participating today. Before we proceed ahead, I would like to take a chance to introduce our eminent speaker, CA Ramesh S. Prabhuji. CA Ramesh Prabhu is a practicing chartered accountant and CISA USA qualified with experience of more than 3 decades and whose opinion is sought on various laws and issues, particularly in RERA and cooperative sector. He is a partner in RS Prabhu and Associates Chartered Accountants Firm, chairman of Maharashtra Societies Welfare Association, a Mumbai-based registered NGO, which is spreading the cooperative society movement across Maharashtra, and chairman of Swagat Housing Finance Company Limited. He is a regular faculty and task force member with Institute of Chartered Accountants of India. He has addressed number of seminars and webinars organized by WIRC, ICAI, government department, newspapers, political parties, NGOs, etc. He is the co-opted member of Cooperative Committee for Maharashtra by WIRC of ICAI for last few years. He has practical, in-depth knowledge of the cooperative and housing sector. He is the author of 40 books on issues like conveyance, transfer of flats, parking, collection of dues from members, and service tax for housing societies. He has authored 4 books on RERA, covering all important features thereof. He is the editor of WIRC Maharera Practice Manual to be published by WIRC of ICAI. He is the editor of MSWA Housing Societies Review, having circulation of 35,000 copies with readership over 1.50 lakhs across Maharashtra state. That is a huge number. He was appointed by Government of Maharashtra in 2008 on its committee for drafting the law for deemed conveyance. He was invited to discuss before the Parliament Committee of Government of India to discuss draft bill of RERA, and most of his suggestions were incorporated in the final approval of the said act. His book on deemed conveyance was released by Shri Prithviraj Chauhan, ex-Chief Minister, Government of Maharashtra, with a forward message from Her Excellency Srimati Pratibha Bai Patil, the then President of India, and CA Ramesh Prabhu had occasion to be presidential guest at Rashtrapati Bhavan, New Delhi. He is a member of the Committee of the Government of Maharashtra to include a separate chapter for Cooperative Housing Society in the Multi-Cooperative State Act 1960, MCH rules, election rules, and bylaws. He has become synonymous with housing society, redevelopment, and RERA matters in Maharashtra. He has authored book on self-redevelopment released by Shri Uddhav Thackeray, CM of Maharashtra in February 2020. We welcome you, sir.
Thank you. You'll introduce Nagamkar also, or you'll do it later?
I'll introduce him in the further session.
Okay. 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 Thank you, Ekta Jain and
Thank
Sunil
you.
Dargaonkar and all the participants. Welcome you once again. So, first of all, let me wish you all happy Deepavali and
Wish you the
give
same,
you
sir.
here
Thank you so
also.
much.
So, let me just take you through the presentation straight away. Just a minute. Give me 1 second. I'll just take out the PPT. Okay. Okay. So, Multi-State Cooperative Societies Act is
Yes,
in
screen
fact
is on.
effective. Yeah. I'll put the screen just little later.
Okay, sir.
So let me just, there is some PPT I had opened 1 minute. Give me only 1 second. Over. Yeah. Okay, there is some problem with the PPT. Mhm.
If you allow me, sir, let me take the time to utilize it in
Yeah,
the
yeah, yeah.
best
You
way.
just yeah,
Can I would like to introduce CA Sunil Nangaonkar, sir.
yeah. Please do that. Yeah.
First of all, welcome, Sunil, sir. And sorry for technical glitches and not providing you the link timely. So sorry for that. But so thankful for your patience. So let me introduce CA Sunil Nagankar, sir, to every members and participants available here. He is educated in MCOM, FCA, DSA, PhD, senior partner of Sunil Nagankar and Company, Chartered Accountants, Kolhapur. Also empanelment for Maharashtra Cooperative Society since 1995 and CAG. He is co-opted member of Cooperative Committee of MH of WIRC ICAI. He is practicing since last 25 years in the field of audit and taxation with bank audit, various types of cooperative societies, project consultancy. He is member of State Government Committee on Audit Manual of Cooperative Societies. He is also faculty for Maharashtra State Cooperative Federation and Kolhapur Urban Cooperative Bank Federation. He is author of a book on audit of cooperative societies. He is chairman of Kolhapur Chartered Accountant Society. He is project consultant for World Bank project of Maharashtra Agriculture Competitiveness Program. He also delivers lectures at various branches of ICAI on topics like cooperative banking, accounting, and management of UCBs, legal compliance of cooperative societies. He delivers lectures on bank branch audit, urban cooperative banks, credit cooperative societies, and public trust on topics like IRAC norms, CAMLEC rating, KYC, anti money laundering, audit provisions of MSC Act 1960, and on various topics of interest at CA study circles, branches, and various seminars organized by Bank Federation, Cooperative Banks, NGOs. He is member of Board of Management and ex-technical director of Shri Varana Sahakari Bank Limited, Varanagar. He is past technical director of Kurunvat Urban Bank. He is chairman of Sterling Tower Cooperative Housing Society. He is ex-secretary of Kolhapur branch of ICAI and holding Rashtriya Pratibha Ratna Puraskar by Maharashtra Patrakar Sangh and also holding Samaj Prabodhan Puraskar by Kolhapur Municipal Corporation. I must say both the speakers we have today is authors, speakers, lecturers, and I think there is no area left with them. So we are so thankful and delighted to welcome our speakers. So without much ado, let's continue. Over to you, speakers.
Yeah. So I'll take overview of the amendment in Multi-State Cooperative Societies Act 2002, which has been done in August 2023, and latest decision of Supreme Court on 97th Constitutional Amendment. So as a cooperative society is a business enterprise. There are three sectors in the business sector if you have to look at. One is private, where the profit is the motive. Public sector, where the service is the motive, where there can be deficit. And in the cooperatives, there cannot be deficit. It is a combination of private and public sector. So these are the various enterprises which can be done in cooperatives. It starts with agriculture, food, retail, wholesale, housing, childcare, community development, or any type of activities, including services, can be done in cooperatives. As far as professional opportunity is concerned, yes, there is accounting, auditing, advisors, members in the governing council. These are some of the professional opportunity. If you look at a financial management overview, then it can be from a governing structure, planning, budgeting, accounting, reporting, monitoring, investment, country regulations, social security schemes, financial audit. These are some of the financial field in which a chartered accountant can play a major role. And as I said, it's a business enterprise. So without CA, it becomes difficult. If you look at across India, across the globe, in Canada, one among three, Norway, one among three, China, 180 million, India, 236 million. These are the people who are involved in the cooperatives. So therefore, over 800 million people are already members of cooperatives across the world. So we cannot ignore the cooperatives from our syllabus or from knowing it. So the question comes, so if at all I have to understand about the cooperatives, what I need to do? Naturally, we have to understand the act under which it is registered. Then we have to look at the rules under the procedural aspect of that act. Then the bylaws approved by the registrar from time to time. Because the way in a company we have memorandum and articles of association. So in the uh, cooperative societies, we have bylaws approved by the registrar. Similarly, there are some notifications, order issued under the Act rules. So the Act always gives the power to the government to come out with the notification from time to time. So basically, there are two types of society. One is multi-state, another is a state cooperative. Multi-state, having an area operation more than two states. Naturally, it cannot be run by the state act, and therefore there's a multi-state cooperatives act 2002. Now, latest development in cooperatives. See, when we are talking about cooperatives, why we have taken up, and there is a lot of amendment which has happened in the cooperatives, which we are discussing today. The latest amendment is, or rather development is, that government has announced the formation of a separate union ministry for cooperatives, where our cabinet minister, home minister, Amit Shah, is the cabinet minister here. You can understand there is a state ministry also in the cooperatives. So why? So that means there is such an important post which is given to the uh, home minister. Then we have, it will provide a separate administrative level and legal policy framework. This ministry is going to strengthen the cooperative movement in the country. It will help deepen the cooperative true people-based movement reaching up to the grassroots. In our country, cooperative based on economic development model is very relevant, where each member works with the spirit of responsibility. Ministry will work to streamline the process of ease of doing business. So around 5,000 crore has been already allocated for making a dedicated software across India, and national cooperative database has also been started. Nearly 40 or 50 initiatives are being taken up, and there is already 40 people team has been built. So we are now today on Multi-State Cooperative Society Amendment Act 2022. If I have to look at that act, what are the history of the law? See, first law came in the Cooperative Credit Societies Act 1904, then Cooperative Societies Act 1912, where credit and non-trade both took place. Then in the year 1919, it became a state subject. Various states started enacting their own law after the independence. And earlier there was 1984 Multi-State Act. In 2002, it was replaced by a Multi-State Cooperative Act 2002. And there was a constitutional amendment regarding the cooperatives, and 9B Constitution Part 9B is introduced, and it was challenged before the Gujarat High Court, which had set aside the constitutional amendment. However, the same went in the Supreme Court, and the Supreme Court said multi-state subject is applicable to the central government. So therefore, whatever amendment has happened in the constitution, it will be now applicable to multi-state society act. So therefore, based on this Supreme Court judgment, a multi-state court amendment act was introduced in the year 2023. Bill was introduced. Then August 2023, the act has been done. Thereafter, required rules also have been made. What is the sanctity of this act or the amendment? Principle of democratic member control. Principles of democratic member control through active members. So there is active members, autonomous functioning, professional management, avoid political interference and corruption, improve administrative and improve reporting system to the government as well as members, good accounting and auditing practices, accountability of management and members. So these are the good governance. In order to bring good governance, this amendment has been carried on. Now, in the 97th Constitutional Amendment, which came in the year 2012 onwards, Article 19 made the right to form a cooperative society as a fundamental right. Article 43 was inserted, which was upheld by the Gujarat High Court, also Honorable High Court. It made a directive principle to the state to ensure voluntary formation, autonomous functioning, democratic control, and professional management of cooperatives. Election Commission, like authority, was mandated. The superintendence, direction, and control of the preparation electoral rolls for and conduct of all election to the cooperative shall vest in such authority or a body as may be provided by the legislation of the state. So it was not only the state which has been authorized. Now that it is applicable to the multi-state also, the central government is now required to form a separate election authority. The constitutional amendment said there will be 5 years term for the board of directors. There will be active members who do active participation, economic participation, and attending the meeting. Professional management, there will be expert directors, functional directors. In the case of a equality, in order to give a equality for providing reservation for women and SC/ST was also provided. Provides for independent professional audit where the auditors panel will be prepared. There is some experienced auditors are taken. Right to information to the members. So there is a appointment of information officer like RTI. Empowers government to obtain periodical reports, accounts, offences. If something is not done, then you are considered as offence, and penalties. These are all the major highlights of 97th Constitutional Amendment, and all these provisions were included in the Amendment Act. So, Multi-State Cooperative Society Act, which is applicable throughout India, and when there are 2 or more states, if there are societies having area operation, this is applicable. So, according to Article 43B, Directive Principle of State Policy of Indian Constitution, inserted by 97th Constitutional Amendment, as I said, amendment was done in the year 2011, it became applicable in 2012. State to ensure voluntary formation, autonomous functioning, democratic control, and professional management. All these four things could be seen in the amendment that has been carried out. I already told you what are these multi-state, where we can find. Yes, these are societies that have operation more than one state. For example, farmer producer organization, which procures grains from farmers from multiple states and then sells at a particular place. Or multi-state cooperative society act provides for the formation and functioning of multi-state cooperatives. There can be consumer societies across India. There can be credit societies. There can be cooperative banks. These are all multi-state societies where the area of operation is more than two states. As I said, according to the Supreme Court, Part 9B, cooperative was inserted and will be applicable to multi-state cooperative societies only, as the states have the jurisdiction to legislate their own state laws. So therefore, this amendment was applicable to multi-state societies only. Now, shortcomings with respect to functioning of cooperatives. See, as I said, the fundamentally why 97 Constitution Amendment was taken care because of inequalities in governance, politicization and excessive role of the government, inability to ensure active membership, lack of effort for capital formation, inability to attract and retain competent professionals. There are also have been cases where election to cooperative boards have been postponed indefinitely. So therefore, in order to have a plug hole all these loophole, amendment has been carried out in the Constitution and thereafter in the Multi-State Cooperative Societies Act. Features of the amendment, as I said, I am going only with the overview. So, election of the board of directors. Now there will be separate election authority. Under the Act, election to be board of multi-state boards are conducted by its existing board. Earlier, it was conducted by the existing board. Now it will be done by the separate state cooperative election authority, or rather, central cooperative election authority. As per the amendment, central government will establish a cooperative election authority to conduct such election. The authority will consist of a chairperson, vice chairperson, and up to 3 members appointed by the central government on the recommendation of the select committee. There will be a select committee who will recommend that. Yes, amalgamation of cooperative society is now permitted. The Act provides for amalgamation of or division of multi-state societies by passing a resolution at a general body meeting with at least 2/3 of the members present and voting. So there has to be 2/3 of the members present, and then they should pass the resolution. And in that case, the amalgamation can take place. The Act also allows the state cooperative society to merge into existing multi-state cooperative society. It was not earlier permitted. Now state cooperatives also can merge with the multi-state, and thus they can become multi-state, which is a very important provision. Fund for sick cooperatives. Act establishes cooperative rehabilitation, reconstruction, and development fund. It is something like an insurance type, but of course for the purpose of restructuring, for revival of sick multi-state cooperative societies. Multi-state cooperatives are that in profit for the preceding 3 financial years shall finance the fund. The society which have got a fund for the last 3 years, they will contribute 1% of the money towards this fund. So restriction or redemption of government sharing. Government also cannot redeem that. Act provides that the shares held by multi-state cooperative by certain government authorities can be redeemed based on the bylaws. Only the bylaws can provide, and based on that, the redemption is possible. Act amends to provide that any shares held by the central and state government cannot be redeemed without the prior approval. That means even to redeem it, there has to be prior approval of the government. Redressal of complaint, very important. As per the amendment, the central government will appoint one or more cooperative ombudsman with the territorial jurisdiction. The ombudsman shall complete the process of inquiry adjudication within 3 months from the date of receipt of the complaint, and thereafter, of course, one can file an appeal. Appeal can be filed before the central registrar, who is appointed by the central government, within a month. Of course, if there is any delay, they can condone the delay also. Significance of amendment, as I said, it will strengthen the cooperative by making them transparent and introducing a system of regular elections. The regular elections will take place. The amendment seeks to align its provisions within those provided under Part 9B of the Constitution of India. Whatever is there in the Constitution of India, 9B, which has been upheld by the Supreme Court, the entire act is, or the Amendment Act is to align it and to have functioning and the governance of cooperative in a best possible manner. The problem or a concern or issues that I see in the amendment is effectively impose a cost on a well-functioning society. See, when you create a separate sick fund, sick or rehabilitation reconstruction fund, you are going to take 1% from the existing societies who are doing well, who are profitable. So you are going to take money from them, create a fund, and then you are going to give somebody who is siphoning the money. So this way, it does not go well. So sick multiple so will be rewarded by a fund that will be financed through a contribution made by a profitable society. Again, the cooperative principles of autonomy and independence, because by restricting and redemption of its shares in the multi-state, and you need approval from the government, which means again you are trying to restrict the power. As I said, Supreme Court has said by a majority of the judgment that the 97 constitutional amendment, which has been struck off by the Gujarat High Court, is been again made not applicable by the Honorable Supreme Court to the state government. However, they are now applicable to the central government. What is the reason of striking down? The amendment introduced clashes dealing with the working of cooperatives working within the state. It was struck down stating that the subject matter fell in the state list, whereas cooperative is a state subject. The amendment can be done by the state government. Central government cannot amend the constitution and bring it. Even if you want to amend, then what is required is then they have to ratify. The amendment has to be ratified by more than at least one half of the state legislature as per Article 368(2) of the Constitution. And in this present case, there was no ratification done by the state government. No doubt, the CM was called, discussed, and they had agreed that, okay, you carry on. But the court said nothing doing. Inviting a CM and taking his consent is not important. Legislative consent has to be there of the state government. So therefore, it was declared that it will be applicable only to multi-state cooperatives. I'm not going into detail. So we already discussed what it concludes. So therefore, cooperative over the years has made a significant contribution to various sectors of the national economy and has achieved voluminous growth. The cooperatives have immense potential to serve the poor sections of Indian soil and secure equitable economic development. Now, some of the definitions. Now, if I have to look at the amendment that has been done, the few definitions, 3 definitions or 4 definitions have been introduced. One is about the authority, means state cooperative election, cooperative election authority, which is set up by the central government. Cooperative ombudsman, which is again appointed by the central government. And earlier it was a cooperative year, now it has been made a financial year, which means from 1st April to 31st March. So without prejudice to this one, even the multi-state cooperative society, they can be, in the case of registration, certain things have been said that what happens is, without prejudice to the provisions made in subsection 1 regarding the registration, the central registrar may register multi-state if aggregate value of the paid-up capital and provisions along with the liquidity, exposure, and other prudential norms. For the first time, prudential norm has been introduced, specified in the bylaws of the proposed cooperative in the business of threat and credit are in accordance with such guideline as may be prescribed. So the rules are made for the purpose of prudential norm. If this is within that means, then only they will be allowed to continue and it can be registered. Otherwise, they cannot be registered. So these are something related to prudential norm. I will request Sunil Nagamkar to take it. Any cooperatives may, by resolution passed by judgment, not less than 2/3 of the members present in the voting at a general body meeting decide to merge with the existing cooperative society. That is what I said. So merging is also possible. State cooperatives also can be merged. Very important, nominal and associate member rights have been defined. It has been said that nominal and associate member can be issued non-voting shares. They can be issued, but they will not have a voting right. So they also cannot be elected as the director in the board of directors, or they cannot participate in the general body meeting. So neither they have voting right, they cannot participate, nor they can come in the general body. So, of course, as far as banks are concerned, it will be governed by the RBI. Now, members not to exercise rights till due payments are made. What it means is there has to be only active member. Voting right is also been regulated that no member of a multi-cooperative society exercise the right of member unless he has made the payment of all the dues. Earlier, it was only about membership. Now, of all the dues to the multi-state, so including the payment in respect of membership or has availed such minimum service. That means, in order to be active member, he has to avail certain minimum service as prescribed in the bylaws. And if there is no such minimum service are not obtained, then they cannot, vote. Also, they cannot be considered as active member. So therefore, it has been said that when they cannot vote, he fails to use the minimum level of product or service as specified in the bylaws for 2 consecutive years. In the 2 consecutive years, if the particular service is not availed, then they are considered as a non-active member, and that is why they cannot vote. Now, Section 41, subsection 3, board shall consist of such members. See, not exceeding 21. See, now I am only dealing with the election. The total number of members cannot exceed more than 21. Of course, in order to do the election, there is going to be separate what is known as election authority, which is being appointed by the central government, and they will conduct the election. And there will be functional directors in the multi-state commission also, that they can be functional director means the people who are appointed as a managing director, CEO, they can be a functional director. And there can be, as you know, also the expert director. There can be 2 expert directors. However, the employees, including chief executive, cannot be from the relatives. These are some of the definitions of the relatives, which is given up to we. There are relatives which has been defined. They cannot be part of this. So, in case they disqualify, they shall be disqualified for being member of the board or deemed to have been vacated in the office. If they are relatives, then they are deemed to be vacating the office. Central government, by notification, establish an authority known as Cooperative Election Authority, which shall consist of chairperson, vice chairperson, members not exceeding 3, and this will be notified. The head office of the authority shall be in a place as may be notified by the central government. A person shall not be qualified for appointment as a chairperson unless he has held the post of the chairperson of the authority shall be unless he held the post of additional secretary to the government or government of India. So this way, the election rules are done. Now everything has to be cooperative election authority only. So filling of casual vacancy up to 2.5 years, you cannot fill up the casual vacancies. And for that, of course, if it is 1/3, maximum 1/3 can be co-opted as a casual vacancies. So these are some of the things I will share with you PPT, and I can only tell you that the systematic election procedure has been prescribed by the central government. With this, I now request Sunil Nagaonkar to take it forward about the various other amendments, whether it is related to the prudential norms, whether it is related to the accounting standard, appointment of auditor, preparing a panel, so ombudsman, dispute redressal, and appeal. There are so many other overview that which I have given. So over to Sunilji. Thank you very much.
Thank you so much, sir. Please, sir, I would like to welcome CA Sunil, sir, to take it forward.
Thank you, Ektaji. Thank you, Ektaji. And Shubha to all participants and one and all. I will discuss the important amendments made in the Multi-State Cooperative Societies Act. Actually, Prabhu sir has already discussed so many things and explained about the election authority and ombudsman and everything. But I will discuss one by one what are the important amendments that had placed in the last month, August 2023. Actually, this is an exhaustive amendment made by the central government, and there are so many changes they have made in the Multi-State Cooperative Societies Act. And I am supposing that every participant of the every member here is having the basic understanding of the multi-state cooperative societies act, because if I go into the detail of any particular section or particular clause of a section or any proviso, it will be difficult for me to discuss. But I will suppose that everything is in the back of the mind of every member. So I will only just explain about what what are the actual amendments made in the Multi-State Cooperative Societies Act. I will take one by one what are the Multi-State Cooperative Societies Act amendments have been passed in the on 3rd August 2023. I will discuss section by section, because the idea behind the amendment is to form an election authority, to have a cooperative rehabilitation, reconstruction, and development fund. There is a specific provision of cooperative ombudsman. There is a first time in the Multi-State Cooperative Societies Act, there is a reservation in the board of directors. There are prudential norms. There is a change in the pattern of the audit as section under section 70, and permission of redemption of shares. So these are the important aspects which have been come with new amendments in the Multi-State Cooperative Societies Act. So before going further, let me tell you that according to the amendment of this act, the government has come out with the circular on 9th of August 2023 regarding the prudential norms. And the prudential norm becomes the act in the first time in the Multi-State Cooperative Societies Act. Although the in case of urban cooperative banks, the Reserve Bank of India is giving so many circulars, directions, or master directions, or the directions. But in case of a Multi-State Cooperative Societies Act, it becomes act. That act has provided for a authority for the central registrar to issue prudential norms on the Multi-State Cooperative Societies Act. So first of all, I will discuss the amendment section number wise, one by one. First amendment is in the amendment section, definition section of the Multi-State Cooperative Societies Act. Definition of definition section is number 3, and there are some changes in the definition. One, a small a clause has been added, wherein the authority means the cooperative election authority established under section 45(1) of the MSC Act. And FA is the new clause in the definition section. Cooperative ombudsman means the ombudsman appointed by the central government under section 85A. So these are the two new sections, and one, cooperative year is omitted. That is clause I of the section 3. Cooperative year is omitted, but newly inserted clause is KA, that is financial year. That means previously there was a mention of cooperative year, although it was a 31st March ending. That means 1st April to 31st March, but now it is a 1st April to 31st March is a financial year. Then next section is section 7 regarding registration. There are some changes in subsection 2 and 3. 2 and 3 is amended and 4 is inserted. So what talks about the 2 is application shall be disposed of within 3 months instead of 4 months. That means central registrar has to take a decision on the application of registration of any group or any promoters of the Multi-State Cooperative Societies Act within 3 months from the date of application, instead of 4 months. Previously it was 4 months. And then prudential norms are to be looked into while sanctioning to the registration of any particular cooperative society. What are the prudential norms? The subsection 2 talks about the paid up capital, provision of reserves, liquidity exposure, and prudential norms specified by the bylaws of the proposed multi-state cooperative society in the business of any kind of thrift or credit society. That means for credit societies, there is a provision to have a prudential norm in the bylaws, and also a circular of central government has been issued on 9th of August 2023, saying that there are some parameters has to be met before going to the actual functioning of the credit society. Now, what are the prudential norms? I will take one by one. The one is definition has been given in the circular on 9th August 2023. There are some classification of societies: micro societies, small societies, medium societies, and large societies. And it is all depend on the number of crores of deposit actually that particular society is having. So, any society, any multi-state cooperative society having deposit up to 10 crores is to be regarded as a micro society. From 10 crores to 100 crores, it will be regarded as a small society, and from 100 crores to 500 crores, it will be regarded as a medium size multi-state cooperative credit society, and for more than 500 crores of deposit, it will be regarded as a large cooperative society, large multi-state cooperative society. So by having the authority given in the section 7 of the multi-state cooperative societies act, that that empowers the central registrar to issue such circular, or the central government has been empowered to give a circular regarding this circular. And so it is defined in the section 7 that what will be regarded as a micro society, small society, medium society, and large society. That means, I will repeat once again: micro societies are societies having deposit less than 10 crores, small societies having deposit from 10 crores to 100 crores, medium sized deposits from 100 crores to 500 crores, and large societies will be having deposit more than 500 crores. So this is the definition as per the prudential norms. Then the same circular talks about the CRAR, that means capital to risk asset ratio, as defined by the as the similar provision have been issued by the Reserve Bank of India for urban cooperative banks. So CRAR is nothing but a capital to risk asset ratio, capital to risk weighted asset ratio. So this ratio needs to be maintained by all type of societies from 9%, 10%, 11%, and 12% respectively, for all kind of micro, small, medium, and large society. That means, for small society, CRAR, that is capital to risk asset ratio, should be 9%. For small, it will be 10%. For medium, it will be 11%, and for large, it will be 12%. I will just share the screen afterwards. After this prudential norm discussion is over, we will share the PPT regarding the amendments of the Multi-State Cooperative Societies Act. So this is there is a one appendix was given in the circular, that how risk-weighted asset is to be calculated. That means the cash will be having zero risk, government securities having 20% risk, and advances are required to be given 100% risk. But unsecured loan, there will be 125% risk, so on. So the calculation of the risk-weighted asset is, after the calculation of risk-weighted asset is over, we can compare the capital compared to the risk weighted asset. And if that ratio of capital to risk weighted asset is more than 9%, that means the society is following the prudential norm. And if it is not less than 9%, then that is to be regarded as a society is not following the CRAR norm. So capital to risk asset ratio. Also, large multi-state cooperative societies to maintain additional risk weight to manage interest rate risk related to investment. So, for example, for more large societies having deposit more than 500 crores, they are dealing in the government securities or the investment of mutual funds and bonds, and everything is related to the market. So, the circular talks about there should be a provision to have a risk weight regarding the investment made with the related to the market. So that is also defined in the circular. Then, if that particular society is not able to have that, is not attaining the CRR prudential norm as prescribed in the circular, that means 9%, 10%, 11%, and 20%, then there is a restriction on refund of shares. That means, if suppose the society is not following the prescribed norm of CRAR of 9%, 10%, 11%, and 12%, then that society is not allowed to refund the shares as mentioned in Section 35 of the Multi-State Cooperative Societies Act. So there is a protection given to the societies as such, that unless they have a good amount of capital, they will not be able to refund the shares of their members. So that is also prescribed in the circular. Then there is a liquidity management. As you everyone know that Reserve Bank of India has prescribed 4% of capital risk asset ratio in case of urban cooperative banks, and 18% of statutory liquidity ratio in case of urban cooperative banks as defined in section 18 and 24 of the Banking Regulation Act. But now this circular talks about the cash ratio required to be maintained by every society, irrespective of whether it may be a small, it may be a big, it may be a large or medium. Any class has to maintain the CRR of 4% and SLR of 18%. Now, how that investment is being made by the multi-state society is given in the circular, that the society can deposit, can have an investment with the scheduled national bank, district central cooperative bank, state cooperative bank, or securities issued by the central government, state government, government corporation, government companies, authorities, and public sector undertakings, or any securities ensured by the government guarantee. So these are the kind of definition given to the multi-state cooperative societies for investment of their funds for a statutory liquidity ratio. Then there is an exposure limit regarding advances. What is the exposure? Exposure for borrowing limit, as you know, in some of the states, like in I am from Maharashtra. Like in Maharashtra, there is a provision of section 43, how we can borrow funds from the members of the outside body. That means there is a limit of 10 times or 12 times of the own capital. They cannot raise funds from by way of loan or deposit more than 10 times or 12 times of their own funds. Now, own funds is also defined in Section 43 of Maharashtra State Cooperative Societies Act, and even the limit is also given by the registrar of the state or the commissioner of state of Maharashtra. And the same provision or the same line, there is a provision in the prudential norm that the maximum deposit any society can accept is should not be more than the prescribed limit. Now, what is the limit? The limit is the aggregate of deposit or the borrowings raised by the multi-state cooperative society shall at any time not exceed such multiples of share capital and accumulated reserve as per the latest audited results. That means, suppose we are observing or verifying or the auditing of the functioning of the any society in 2023-24. That means we have to check whether, according to the audited balance sheet of 31st March 2023, what are the shares, what are the accumulated reserves, and we can calculate the own funds accordingly, and on that basis we can calculate how much deposit they can accept. Now, for example, if suppose any society having own funds of 10 crores, that society is able to accept deposit not more than 80 crores. That means for large society it will be multiple of 8, for medium society it will be multiple of 7, for small society it will be multiple of 6, and for micro society it will be multiple of 5. That means in any case the acceptance of deposit should not be more than the multiples as prescribed in the circular. But I am of the different opinion that this should have been a 10 times of the own capital. But this is my view. But as per the circular, we have to follow the circular given by the central government, that every society has to accept deposit up to the limits given in this circular. That means you cannot accept deposit or borrow funds from the higher agencies more than the 5 times, 6 times, 7 times, or 8 times respectively of the own capital. So this is very clear. Any member or the any participant have any objection or any query, they can put in the chat box. I will answer it at the end of the discussion. So this is very technical, but we need to understand what is the meaning of this borrowing limit. As like in Maharashtra, we are having a borrowing limit of 10 times, 12 times. But in case of multi-state cooperative societies act, it should not be not more than 10 times, sorry, 5 times or 8 times, 5 to 8 times. So this is prescribed in the circular. Then again, there is a exposure. Individual borrowing exposure is given in this circular, that aggregate exposure to any individual borrower on loans and advances and investment should not exceed 10% of Tier 1 capital. Now it is very clear, Tier 1 capital means only share capital, reserve fund and building fund. That means any profit, own funds of that part which cannot be utilized with any other sources. So Tier 1 capital 10%. That means a multi-state cooperative society can advance to any borrower up to the 10% of the Tier 1 capital. Now suppose any society having a capital of 10 crore, then the limit to give loans to any particular individual will be of 1 crore. That means 10% of the own capital, Tier 1. Then there is a group exposure. Group exposure is not should not be 25% of Tier 1 and Tier 2 capital. The Tier 1 and Tier 2 both together, that means whatever we are making calculation for CRR and what is the capital in the Tier 1 and Tier 2, that can be taken for calculating this 25% of the exposure limit for group of borrowers. Now group is not defined, but we can take a ratio from the definition given in the act regarding the relative. Then there is the cap of unsecured loan. There is a cap of unsecured loan. Total unsecured loan given by any multi-state cooperative society taken in together should not be more than 15% of the total loans and advances. That means that particular society needs to check whether we have a unsecured loan quantum. We should not have an unsecured loan quantum more than 15% of the total portfolio of their own loans and advances, and not to the total asset. Now in case of urban cooperative banks, there is a circular given by Reserve Bank of India regarding unsecured loans. Restriction is they should not be 10% of the total assets and not the total advances. But now in this circular talks about 15% of loans and advances only can be given to the unsecured borrowers. Then again, there is an exposure limit of real estate, commercial real estate sector, housing sector. The exposure should not be, it is capped with the 10% of the total loans and advances. Then, but individual exposure, the board of multi-state cooperative society to make a policy to have an individual housing can be given by small society can be given up to 25 lakhs rupees. Medium society can give only up to 30 lakhs rupees, and large society can give up to 35 lakhs. Now there is a conflict of this provision, because RBI says the housing sector needs to be given promotion for development, and RBI has recently increased the limit from 70 lakhs to 140,000 lakh 40,000 limit to any individual. But now this circular restricts for the functioning of the multi-state cooperative banks, that they cannot give loan to any individual more than 35 lakhs. So there is a conflict of interest. And whenever we are talking about the contradictory provision in the two state act and central act, then central act shall prevail. But in case of this banking regulation act and multi-state cooperative societies act, these are all both acts are of central government. Now this is there should be a clarification regarding the exposure limit to any individual borrower. Then there is a provision of IRAC norm given in the circular, income recognition and asset classification. Uh, as we know, the NPA circular is already issued by Reserve Bank of India from last 20 years, 25, 30 years, 25, 30 years, and everyone knows about it. But again, this circular speaks about the classification of cash credit accounts. Cash credit accounts can be classified as NPA when it exceeds the drawing power or limits continuously for more than 90 days. And if it is less than the borrowing limit, but if there is no enough credit to cover the quarterly interest charge in the account for last 90 days, then also this account of cash credit will be treated as a substandard or NPA as such. And then there is a provision of asset classification in the circular. Asset classification is to be made on the basis of 90 days delinquency norm. That means any account which is overdue or irregular from more than 90 days will be regarded as an NPA, that is non-performing asset, and it will stay for 12 months in the substandard category, and after 12 months it will be regarded as a doubtful category. And if there is any um, difficulty in recovery, or in any case the auditor infers that the prospect of recovery is poor due to failure of business, or misappropriation of the property, or sale of the secured property, then there will be regarded that account will be regarded as a loss asset. So these are the important provisions regarding the income recognition and asset classification. Then there is another provision of another provision given in the same circular regarding prudential norms is branch expansion. Now, multi-state cooperative societies are asking so many years from central register that they want branches to grow their business. Now, this circular has come out with the idea how they are giving the branches for the expansion of a multi-state cooperative credit society. Then there is a provision that 10% of the branches will be allotted if they are meeting the required criteria. Now, what is the criteria? Criteria means first they should have a CRAR more than 12%. The gross NPA should be less than 7%. Net NPA should be less than 3%. There should be a net profit from last three accounting years. There is a consistently maintained liquidity buffer, and there is no default. And then there is a strong internal control, and there is a established customer grievance redressal mechanism. So these are the important conditions before sanctioning branches to the multi-state cooperative societies. So this is also mentioned in the circular. Then there is a provision of reports and disclosure regarding the online submission of the uh, various returns to the central register as mentioned in the prudential norm circular. Then that means every multi-state cooperative society has to submit to the central register uh, various returns like CRR, deposit, borrowing to subscribe capital, accumulated reserve, liquidity buffer, gross and net NPA ratios to the central register on quarterly basis through the portal. That means on portal they have to give all the information regarding the submission of returns on central register portal. Then there may be a problem for some of the societies. Might be a case that some of the societies are not maintaining the required CRAR. So they have come with the transitional period. That means that society, if they are not maintaining CRAR right now, they have to complete their capacity within a 3 years from the uh, date of this circular. That means from 9th August 2023 till 9th August 2026, they have to maintain the CRR as prescribed in this circular. So this is a transitional period. Now everything knows about the tier 1, tier 2 capital. This is given in the annexure. Um, that means tier 1 capital is paid up capital from regular members having voting rights, share capital and non-refundable admission fees collected, free reserves as per the audited accounts, capital reserve, any surplus, and any reserve specially created under section 36(1)(8) of the income tax act. So these are this is the definition of tier 2 capital. And from tier 1 capital, and in tier 2 capital there is a provision of revaluation reserve, general provisions, that means standard asset provision, and it should be restricted to 1.25% of the risk-weighted asset, as like in the Reserve Bank of India circular for urban cooperative banks. This is designed, the whole circular is designed as such. But I think they have come out with the so many issues in the one circular. I am of the opinion, and I may be different than the policymakers, but I am of the opinion that there should be a separate circular for non-performing asset. There should be a separate circular for branch expansion. There should be a separate circular for CRAR, and there should be a separate circular for loans and advances, that is exposure to be given to the particular individual borrower or not. So this is the very important circular I have discussed before going to the amendments of Multi-State Cooperative Societies Act. Only we are discussing only a number 7 section of the multi-state right now. There are so many sections which have been amended, and we are short of time. We are running short of time. I have to complete by 6 p.m. I will touch upon the important aspect, and then we will have a question answer session at the end, and then we can conclude our discussion. So this is all about section 7, that every in case of every registration of multi-state cooperative societies act society, the central registrar will see whether there is enough share capital, reserves or liquidity and exposure to be met within 5 years. That means whatever I have discussed right now regarding this prudential norm, that society has to complete all these parameters within 5 years from the date of this commencement of this act. And there is some change in this section 7, that if any in any case, if the CRCS, I am let me tell you the short forms I am using. That CRCS means a Central Register of Cooperative Societies, and MSCS is a multi-state cooperative society. So I will discuss accordingly. That CRCS means Central Register Cooperative Society. Now the CRCS has to communicate the. I will share my PPT right now. Just a moment. I will share my PPT. Just a moment. Okay. I will send it that PPT to Ektaji. You can have that idea. Then,
Okay, sir.
if sup- if suppose CRCS is failed to communicate the order of refusal of registration, then there is a deeming provision that then the application shall be deemed to be accepted for registration. That means if the central registrar is failed to communicate the reasons of refusal of their registration, then there will be a deeming provision that the application of registration will be final, and he has to give a registration certificate to that particular applicant that the society has been registered. Then next section is section 10. Section 10 talks about the bylaws of the cooperative society, and wherein the address is mentioned in clause 2a. The words were substituted for address. It is address including email address. This is a minor change. Then even in section 14, the heading of change of address is changed, and the name of the section is changed to address only, and then address including email address. These are the minor changes. But in case of section 17, amalgamation and transfer of assets of assets and liabilities of multi-state cooperative societies, this is an important provision made in the Multi-State Cooperative Societies Act, that a society which has been registered in any state, that means a state society, can be merged with the multi-state cooperative society if two-thirds of the members pass the resolution by majority of two-thirds at present at general meeting, and voting of the general meeting of such society decides to merge into the existing multi-state cooperative society, then that will happen. Earlier, it was not allowed to merge any state society with the multi-state society. But according to this amended section 17, any state society can merge with the multi-state cooperative society by passing a resolution in the general meeting. Then that the respective state cooperative society act, commissioner has to demerge or the deregister that particular state society. There was a provision in earlier section, but now by virtue of registration, by virtue of acceptance of amalgamation or the merger of any state society, it is allowed to have a particular cancellation of the registration in the respective state of that particular society. So this is a new provision. Then section 19 talks about the explanation was omitted. Explanation was that regarding section 19 is promotion of subsidiary institution, that one or more members of the multi-state society hold, whether by themselves or together with subsidiary institution, that particular clause 3 is omitted, and only uh, promotion of subsidiary institution is remain with the two clauses only. Then regarding section 22, conversion, regarding conversion of multi-state cooperative society. Regarding conversion, that if suppose any society registered in any particular state is aspiring to have their functioning more than one state, and they want to convert their society into multi-state cooperative society, then that conversion is possible. But while converting that particular society, they were required to have sanction from the central register. But now in case of this clause 5, conversion of 5c, they will convert that society with the amended section that the society due to have been deregistered under the law relating to cooperative society for the timing in force, and forwarded to such cooperative society along with copy of register amended under section 3. That means by virtue of conversion, they will communicate to the state registrar, and that state registrar will demerge that particular society from their area, and that society becomes multi-state cooperative society. That was mentioned in the circular section 22 that was amended. Then again section 26, 26 is talk will talks about the nominal or associate member of the society. But there is a clear cut provision that nominal members were not allowed to hold the shares. That means there can be a they will be a members, but they will not be a shareholders. That means they will not hold any shares in the share capital of the society. But now it is allowed to have a share capital without voting rights. That means that particular member will be a shareholder, but he don't have any voting rights and may not confer any interest in the management of the state cooperative society. That means this is a there was a problem facing for augmenting of capital in case of multi-state cooperative societies. They are facing the problem and they are increasing the number of members and they are collecting the share capital from the members, but they are facing the political issue or the election or the management control. There are so many issues was raised by the board of directors, existing board of directors of the multi-state cooperative societies, multi-state cooperative banks, and the society. Now, the central government has come out with a new clause that means any nominal member can be a shareholder, but he don't have any voting rights. And this is a good move by the central government that they can augment, they can increase their capital without having voting rights in the management of the society. Then there is a provision in the section 28. Section 28 talks about the members' right. Now, it is a very tricky question that already Ramesh Prabhu sir has already discussed about the members can have only rights only if they are holding the shares in full. That means they are unpaid or they are partly paid, they are having partly paid shares, they don't have any right of members. But this is okay with the shares, but this is not okay with the any amount dues with the society. Now the amended section 28 talks about what the amended section clearly says. If the society in respect of membership of all dues of multi-state cooperative society, including payment in respect of membership, or has availed such minimum level of product or services as specified in the bylaws. That means if any member is holding the shares but not having participation in the management or the actual transaction of the society, then the active members concept is enacted in the section 28. That means unless you are active member, you cannot vote or you cannot have a right of member. That means right of member even not only for election or the participation in the election or the to have a seat of board of directors, but there is no any right of member. That means a member can ask for information, a member can ask for inspection of books, a member can ask for the bylaws. Every right is prevailed unless you are having a active participation in the transaction of the society as such. So this is a new concept introduced in the section 28. Then there is a disqualification of member of MSCS. That means if any member member's disqualification, if he used to, for 2 consecutive years services below the minimum level specified in the bylaws. That means he can be disqualified and not only to be treated as a non-active member, but he can be a disqualified from the membership of the society. This is mentioned in section 29. That means if he fails to use minimum level of product or services as specified in the bylaws for 2 consecutive years. Now we can take an example of credit society. If a credit society is having a provision in the bylaws regarding the important provision that they should take at least they should have a deposit of 50,000, or they should take at least 10 50,000 of loan, then only that society, that member will be regarded as active member. That is given in the bylaws. If the member is not having that kind of transaction with the society for last 2 years, he can be disqualified. That means not only regarded as a non-active member, but he can be a disqualified from the membership of the society. Now this is a harsh provision, but there is a concept of active members as mentioned in the 97th constitutional amendment, that there is a provision of active members, and if there is no provision in the act itself, then there will not be any implementation of the whole theme of that constitutional amendment. So they have enacted in the section 29. Then that means if any member is not having minimum level of services or minimum level of transaction with the society, they will not be having rights as mentioned in section 28, and as mentioned in section 29, they can be disqualified from the membership. Though this is a harsh provision, but this is a provision as the act is already passed, so there is no one can appeal. Then there is an amendment in section 30 regarding expulsion of members. Now, previously, what happened is if suppose any member is expelled from the membership, he cannot be he cannot be readmitted as a member after up to 1 years. Now, according to new amended law, he cannot be eligible for readmission for 3 years from the expulsion. If any member is expelled from the membership, he cannot be readmitted as a member after 3 years from the date of expulsion. So this is important. Then regarding section 35, 35 talks about the redemption of shares. Now, I have already mentioned in the discussion of prudential norms given by the central government on 9th August 2023, how they are having the whole idea of CRAR, maintaining of CRAR, and returning of shares. Now, this is the only kind of society or the format that they are repaying the shares as like debentures. But for limited company, they are not allowed to repay the shares. But cooperative society can repay the shares. Now the redemption, that is redemption or repayment of the shares, can be made without, if suppose that particular society is not having required level of CRAR, the shares of central or state government shall is to be redeemed only with the cannot be redeemed without prior approval of such authorities. Now, this is a provision in section 34. That means there are societies having share capital more than state, more than two state or share capital of central government in particular multi-state cooperative societies. But for redemption of shares, that means returning of shares, that authority should uh, give approval for redemption of shares. That is mentioned in the section 35. Then again, section 35, there is a replacement of subclause 2 to 3. Then important aspect is there was no mention in the and topics to be discussed at the general meeting as mentioned in section 39. The important matters which have been handled by the general meeting, there was no provision for appointment of auditor. Now, as per the new law or the amended act, section 39p has been added, wherein appointment of the auditor has to be made from the panel register by panel maintained by the register. There is two panels. The panel A talks about the auditors which are allowed to conduct the audit having deposit more than 500 crores, and panel 2, the auditors which can be appointed for the societies having deposit less than 500 crores. Though the respective auditor has to be selected from the panel maintained by the central register, and it is given in the section 39. Then another amendment is made in section 41, Board of Directors. Now it is a huge provision. There are so many provisions have been made. Then subsection 3 is substituted so as to give effect to include one member from scheduled caste and scheduled tribe and two women members category. That means a particular society should have one member from scheduled caste, scheduled tribe, and two women members with on their board. And these two co-opted members of the board having experience in the field of banking, management, cooperative management, finance, and specialized in the field relating to the object or activities undertaken by that particular MSCS. So there are provision 2, 3 provision have been newly added. That subsection 4 is added, that co-opted members shall not have any right to vote in the election of office bearers. The functional director shall also be the members of the board. That means any CEO can be a functional director, managing director, or the general manager can be a functional director of that particular society, and he can be, but it can be counted. It cannot be counted in that particular 21 number of ceiling is given in the act. Then no director shall, as a director, be present in the discussion of vote on or any contract or arrangement entered into, and the concern he or by behalf of society, and if he or his relative is directly or indirectly concerned or interested in that particular contract, then he will not be allowed to attend the meeting, or if at all he is attending the meeting, he cannot have any say in the discussion of the particular board decision. Or no relative of the any of the sitting director of multi-state cooperative societies shall be recruited as an employee, including chief executive officer. That means a chief executive or any employee cannot be a relative of any directors. This is very important provision, and this is very important provision amendment made in the section 41. That means they cannot appoint a chief executive who is a relative of a chairperson or the vice president or president, and like that. And the subsection 6 has given a relative definition. There are all about 24 relations. Now you know the every act specifies the definition of family or definition of relatives in the particular section. Now this particular section 41(6) talks about spouse, father, mother, son, son's wife, daughter, daughter's husband, father, father's mother, mother's father, mother's mother, son's son, son's wife, son's daughter's husband, daughter's son, daughter's son's wife, daughter's daughter, daughter's husband, daughter's including step brother, sorry, brother including step brother, brother's wife, sister including step sister, sister husband, and Hindu undivided family. So there are all about 24 relations in which you need to take care of that any transaction or any contract made with the relative is void and is not allowed, and it can be seen whether these have been entered at fair market price or not. Then again, section 7 is a replica. So only 4, 6, and 4, 5, 6 has been added in the section 41. And any director who violates the provision of subsection 6 shall be disqualified by being a member of the board. So for example, if any contract is entered with the family or a relative, and it is come to the notice of the auditor or the central registrar, then he has a right to expel the or disqualify the member of the board according to section 41. This is a new provision. I think this is a very vast amendment made in the section 41 regarding the co-opted members. Then I talked about the reservation of scheduled caste, scheduled tribe, reservation of women in the board. Then functional director can be a director, also a member of the board, and but will not be counted in 21. And there no director of MCS be present in the discussion of any contract or arrangement entered into with his relative. And section subsection 7 talks about the disqualification if he violates the section 7. That means you come to know, or the auditor come to know, that particular director was present and he participated in the discussion of the board of meeting, then he will be disqualified from the board. So this is very important provision amendment in section 41. Then there is a provision, another provision in section 43, disqualification for being a member of the board. How the member will be disqualified from the board of directors is defined, and there are so many amendments made, and so many amendment have been made. I will just talk one by one. Then how only I will touch upon the amended part and not the existing part. The amended part is in clause A. It has been made a provision that if suppose any person who is a member of the board has been a director of an insolvent company is a newly defined concept. So this has been added in clause H under any other act as specified in third schedule. That means he has a commit any he has commit any offense, or a person against whom any amount is due under decree, decision, or order pending under recovery under this act. So this is there is one circular in Master's amended act. Third third schedule is talks about the various acts which are applicable to multi-state cooperative societies act, societies. And if suppose any member who is a against whom any amount is due can be disqualified from the board of directors. Then again, there is a provision of section clause O. If suppose anyone who has been disqualified under section 41.7, now 41.7 is again violates the discussion of the board of directors, can be disqualified from the member as a member of the board. A member who has been a director of multi-state cooperative society or bank, and such board has been superseded, shall not be eligible to be elected as a director of another multi-state cooperative societies act for a period of 5 years of supersession. That means any board has been superseded by a central registrar in the past, and any member who is a member of the board of that particular society, he cannot be a director in any another cooperative multi-state cooperative society. This is a new provision. That means, but in any case, reasonable opportunity of being held is to be given by the central registrar, and then only he can give a decision regarding disqualification of member of the board. Then again in section uh, 43, A very harsh provision has been made regarding disqualification of being member of the board. If suppose any member of the board is failed to provide information, document, funds or expenses or any other assistance as required by cooperative election authority, he can be disqualified as a member of the board. Or he fails to make contribution to cooperative education fund and cooperative rehabilitation, reconstruction and development fund, then also he will be disqualified from being a member of the board. Then, if suppose any member is failed to file the annual return within the time limit specified under section 120, that one section 120 talks about the filing of returns within 6 months from the end of the financial year. That means every society has to file their returns within 6 months. That is up to 13th September 2023 for 23 March 23. So this is all about, if suppose this is the disqualification part. Then again, if any member is failed to get the audit of society conducted within 6 months from the close of the financial year, that suppose if any society is not able to complete their audit up to 30 September, then the all members of the board or the members of the board who are responsible for conducting the audit will be disqualified according to this section 43. But of course, there is a reasonable opportunity of being heard has to be given to the particular member by the central registrar, and then only he can give a particular decision regarding disqualification. Then section 45 already discussed by Ramesh Prabhu sir, and I will not discuss more into in the detail regarding the section 45, that separate election authority has been established by the act, and separate election authority will discuss the procedure and the appointment of the chairperson or the casual vacancies and whatever the provision has been made. This is all given in the section 45. Then in section 47, sorry, section 49, there is a provision of the section 49 talks about powers and functions of the board. Now there are some. There is one clause has been added in subsection 2 to elect chairman, vice chairman, or president and vice president of MSCS from amongst the elected member in accordance with the direction of authority. Now here the direction of authority is very important. Previously, what was the provision? There was a provision that election of office bearers, that is chairman and vice chairman, will be selected, sorry, elected amongst the elected members according to the majority, and it will be for the period for which they have been elected. Now, this new clause have been inserted. It talks about to elect the chairman, vice chairman, or the president and vice president of MSCS from among the elected members in accordance with the direction of election authority. Now, what is the direction? Direction is, if there is a remaining period of the remaining period of the board is less than half of the total period, that means 5 years, then they can elect. But if there is a remaining period is more than half of the election period, then they have to approach to the election authority, and the election authority with the presiding officer, they can elect the chairman or vice chairman according to this new amended law. Then recruitment of such employees shall be subject to such procedure as may be prescribed. This is a new clause. E has been inserted in the section 40. That means there will be a procedure, or there will be any rules will be notified by the central government, and on that basis only we can appoint the employees, or the recruitment of the employees can be done according to rules notified to be notified by the central government. Then how the meetings of the board will be convened. This is also amended section 50. There was a provision in subsection 1, clause A provision was inserted that provided when such chairperson or president fails to direct chief executive officer to convey the meeting of the board within the quarter, such CEO shall convey the meeting on the basis of requisition of vice chairperson or the vice president or any other member of the board. Now, what was the provision before amendment? Before amendment, there was a proviso that a chief executive shall convey the meeting of the board at the instances of chairperson, and for any reason he is unable to attend the meeting, then other member of the board will be chosen as a member of the board as a chairman of the meeting, and he shall be presiding the meeting. Now this amended proviso talks about if a chairperson or the president fails to direct chief executive to convey the meeting, then any member can ask to convey the meeting to the chief executive. Or chief executive may also convey the meeting on the basis of requisition made among the 50% of the members of the board. So this is a new amended section, amended proviso. Then subsection 3 was substituted to give effect of absence of chairman and vice chairman. Any member can be presiding over the meeting. And subsection 4, the quorum of the meeting of the board of director of society shall be one third of the total number of board of directors. So this is new subsection added for quorum of the meeting. So this is all about section 50. Then section 51 talks about the chief executive. Now, what is chief executive? What are the duties and what are the functions to be? What are the functions of the chief executive? Is already there in the act, but with the new amended act, one section 1A is inserted. Section 1A is inserted so as to give effect that no multi-state cooperative society shall appoint or continue appointment of any person as a chief executive who is a below years of 21 years or has attained the age of 70 years. That means, as like in urban cooperative banks, the fit and proper criteria is already there in the circular in case of multi-state cooperative banks by the Reserve Bank of India. But now this is all made a provision in the act itself, that what is a qualification, who can be a chief executive, who cannot be a chief executive, is given in this fit and proper criteria, or we can say it as a provision of section 1A in the act. He should be below 20, he should not be below 20 or more than 70 years of age, provided any person above the age of 70 years may be appointed by special resolution. Now, everyone knows about the meaning of special resolution. Special resolution means it should be given the note with the notice, and at least three-fourths of the members present at the general meeting can pass the resolution accordingly, and then only that resolution will be regarded as a special resolution. Then the special resolution by three-fourths of the members in the case of in which case the explanatory statement annexed to the notice for such motion shall indicate the justification of such appointment. And he is undischarged, insolvent, or has any time been adjudged as insolvent, or has any time been convicted of court of an offense and sentenced for a period of more than 6 months, or does not meet the criteria of fit and proper as determined by the central registrar in case of multi-state cooperative societies, credit societies, or in case of non-credit societies, does not meet the criteria as the central government may prescribe in terms of the education, qualification, and relevant experience. Now, this is all provided in the section 50 by way of subsection 1A, sorry, 51 by way of 1A as such. Then section 52. 52 is similar to our multi Maharashtra State Cooperative Societies Act Rule 61. Then, in how many days the balance sheet has to be prepared or the financial statement has to be prepared. Now, section 52, there was a provision regarding the preparation of the financial statement within 30 days. Now, it has been amended to give effect to the 45 days. That means any society has to prepare the financial statement for the approval of board within 45 days instead of 30 days from the end of the financial year. That means before 15th of May, that board has to pass a resolution for approving the financial statement of a 31st March. That is very important thing. Then there is an amendment in section 53. 53 committees of the board. Now, what was the provision earlier? I will not discuss, but I will only explain what is a new provision. One provision is one is substituted and replaced with the as may be specified in the bylaws of the Multi-State Cooperative Societies Act, and proviso was given that there should be a committee, an audit and ethics committee, one, and there is should be a committee on prevention of sexual harassment at work. So these are the two committees every society should be having their subcommittees in the board as per the section 53 amended act. That means these two committee, in addition to the committees which is already mentioned in the section 53 that board may constitute executive committee and other committee, it should not be more than three committees. So this is all there. There should be a three committee, but in addition to that, there should be an audit and ethics committee and committee on prevention of sexual harassment at work. So these are the two important amendments made in the section 53. Then section 63 is amended for uh, giving disposal of net profit. Now, section 63 talks about the distribution of profit, that means disposal of profit, and is substituted, 1B substituted, that every society should credit annually 1% of net profit to cooperative education fund to be maintained by the central government in such manner, and the proceed from such fund shall be used for the cooperative education and training through National Cooperative Union or any other agency as may be described by the central government. That means every society has to contribute 1% to the Cooperation Education Fund. And section 63A, capital A, is inserted to give a authority to the central government that it shall establish a fund. It has already been discussed by Professor that it is a very burden on the well-going societies, that cooperative rehabilitation, reconstruction, and development fund for revival of sick multi-state cooperative societies for development of purposes in such manner, and the all the society has to contribute at least 1% or 1 crore rupees, 1 crore rupees, whichever is less, to this particular fund, that cooperative rehabilitation, reconstruction, and development fund. A very huge amount has to be contributed by that multi-state society to the rehabilitation fund. Then central government by notification constitute a committee consisting of such member for managing the funds, and that the fund in consultation with the CAG, that Controller and Auditor General of India, and the committee shall spend the money out of the fund for carrying out the object of such fund has been established. And section 63B, this is a new section added in the act. At any time central registrar of the opinion that a particular society become sick, then the central registrar can make an order and declares a society as a sick society. And when he can see declare that society as a sick is negative network, we can simply call it as a, if any society having accumulated losses more than their own funds will be treated as a sick society. Then the central government, on the recommendation of general body and to give effect to the scheme of rehabilitation, reorganize the board of such society. Now, suppose a particular society has become sick and declared as a sick by central registrar, then with the recommendation of general body of particular society and to give effect to the scheme of rehabilitation reconstruction, the central registrar can reorganize the board of the society with such person having experience in the field of cooperation management, finance, accountancy, and any other area relating to such society as recommended by the general body. So this is a new provision, and then there is a one proviso has been added that in respect of sick multi-state society, any scheme for rehabilitation shall be done with the approval of Reserve Bank of India in case of multi-state cooperative bank. Now, no doubt there is a two-way controlling is have in the India. For multi-state cooperative bank, there are two regulators. One is the registrar of cooperative societies, and one is the governor of Reserve Bank of India. But in this case, it is clarified that in case of any multi-state cooperative bank, the rehabilitation process will be done by the Reserve Bank of India only, and there will not be any interference by the central registrar. Then again, explanation has been given who can be a Sikh society. Who can be a Sikh society is given the circular itself, that Sikh society means a multi society which at the end of any financial year having accumulated losses equal to or exceeding the total of paid up capital and free reserves and surplus, and also suffered cash losses in such financial year or the financial year immediately preceding such financial year will be treated as a Sikh financial year. Then again, section 63C has been newly added, that on an application made by multi-state society which has contributed to the fund for continuous five preceding year, grant such financial assistance as it may consider appropriate to the society out of the fund for the reconstruction and redevelopment, provided at least 51% of the total requirement shall be borne by the multi-state society, and the financial assistance from fund shall not be exceeding more than 50% of such requirement. Then that means if at all there is any provision to be made to any Sikh society, then that fund will be utilized for promoting the activity of multi-state society by contributing at up to 50% of the requirement of that particular rehabilitation. Then again, committee constituted under section 63A of 2 of the Act shall examine and recommend to the central government for providing financial assistance to multi-state society to the extent and so on such terms and conditions as it may consider necessary. Then new section 64, it becomes a more monotonous that I am discussing right now from last 1 hour, an hour, that I am discussing each and every, but I am running short of time. Ektaji, I am allowed?
Yes, sir. You can take two more times.
Yeah, yeah. Because we have to discuss so
I
many.
think we can conclude in 10 minutes because we have only few questions, 6, 7 questions.
Okay, okay, okay. Then I will just touch upon the important aspect of the
Take your
remaining
time, sir.
clauses or remaining section. Huh? Then section 64, there is section 64 is an investment of funds. Investment of funds is replaced with any other institution. There are some cosmetic changes that with any other bank, some there is given. Then restriction on borrowing is the section 67. Restriction on borrowing is we have already discussed this 10 times, is replaced with such multiples as may be determined by central government. That means the multiple is already given in the prudential law circular. Important clause is appointment of auditor. Section 70 talks about the appointment and remuneration of auditor. There is one amendment in this particular act of section 70, that auditor or the previously what there was no panel of auditors maintained by the central registrar, and the multi-state cooperative societies are appointing the auditors from the uh, list of CAs as on the members from the institute, and there was no panel prescribed by the central registrar or prescribed by the board of the general meeting of the society. They were appointing just a chartered accountant who were in the CAG panel or like that one. But now it is the amended section 2A is substituted, provided that such auditor or auditor firm shall be appointed from the panel approved by the central registrar. Now the panel is already notified by the central registrar, and there is two-way panel. Panel is maintained by the central registrar. One panel is for the societies having turnover or the deposit more than 500 crores, and another panel is of auditors having uh, which are allowed to conduct the audit having deposit less than 500 crores or turnover less than 500 crores. So there are two panels, and the respective auditor has to be appointed from the panel maintained by the central registrar. You can visit to the central registrar. You can visit to the central registrar website. You will find the so many number of auditors, and I think there are all about 10,000 auditors on the panel of central registrar, and particular society has to choose their auditor according to the panel, according to their turnover or according to their deposit base. So there was no provision earlier in the before amendment of this act, the auditor, how the auditor is to be appointed. But now auditor is to be appointed from the panel only. So this is a new provision. Then again, there was a proviso given in the section 70A regarding the multi-state cooperative societies having deposit more than 500 crores and multi-state non-credit societies having turnover more than 500 crores. Auditors shall be appointed from the panel of auditors as approved by the central registrar. And then again, section 3A is inserted. An auditor appointed under section 2 shall submit the audit of accounts, audit reports to the multi-state society within 6 months from the date of closing the financial year to which the such account related. That means auditor has to report before 30th September of every year for the accounting year ending on 31st March. Then there is one change in the proviso, that section 7A in the section 70, and there is a substituted provided that where such vacancy is caused by resignation or death of auditor, vacancy can be filled by board from the panel of auditor. That means if at all there is any vacancy due to resignation or death of the auditor, then earlier there was a provision that auditor has to be appointed from the general meeting only, but now you can appoint from the board meeting uh, for the casual vacancy. This is a new amended law in section 7A. And then subsection 10 was inserted, that for national cooperative society the audit report is to be laid before the house of parliament. There are all about 19 national cooperative multi-state cooperative societies. That report has to be laid on the parliament, house of parliament. Then section 70A has been inserted for appointment of auditors having annual turnover more than the amount determined and having deposit more than the amount determined by the central government. The concurrent auditor shall be appointed from the panel of auditors. That means right now, if suppose any society is having deposit more than 500 crores, concurrent auditor provision has been made in the section 70A itself, that the cooperative concurrent auditor has to be conducted for that particular society. This is all about section 70. And I think there are so many other provisions are there, but we are running short of time. But I will touch upon the important in one two lines only. Uh, there is one provision in section 73, that powers and duties of auditors, that subsection 6 was inserted, that multi-state society or class of society shall adopt such accounting standards or the auditing standards as determined by the central government, but provided that until the central government notifies it, you can use the accounting standards or the auditing standards as notified by the ICI. So already it is given in the proviso. So these are the new amendment made in the section 73. Then inquiry is we can discuss later. Then there was a new chapter has been inserted for redressal of complaints for ombudsman. Section 85A has been added, and section 85A talks about the cooperative ombudsman, where we can approach if anybody aggrieved by the information given or any grievances not resolved by the information officer or any society management. Then any member or aggrieved party can approach to the ombudsman, and there are so many things have been given in the ombudsman. Then review of decision, cooperative society functioning immediately before reorganization. Offences penalties have been increased from 5,000 to 2,000 to 5,000 and 10,000 to 1 lakh in various sections. So there are so these are also the important amendments made, and I think one more important aspect which is more relevant to the functioning of the society is section 120, wherein the some clauses have been added for filing of return disclosure regarding employees who are relatives of the members of the board, and declaration of any related party transaction by the board of directors. This is new amended law of section 2120. So these are the important things I have to discuss with you. And thanks, committee, for giving me this opportunity to share my view on the new amended law. We can have a discussion, we can have a question answer discussion, and then we can conclude. Thank you.
Okay. Thank you, sir. We have few questions. One member asked that the limit of 5 8 times, जो 5 to 8 times limit is applicable only to borrowing or both for borrowing and accepting deposits.
Yeah, for both it is multiple of 5, 6, 7, 8 is applicable. Now
For
suppose
both.
now suppose there are some salary earner society. They are relying on the loans also. Not they are not relying on the only deposit. They are taking higher loan from the higher agencies like state cooperative bank or district central cooperative bank. So both loan and deposit should not be more than the multiple of 5, 6, 7, 8 times of the own capital.
Okay. Another question is whether dividend from cooperative society is taxable in the
Dividend is taxable in the hands of the member.
hands
Yeah.
of the member, and whether the income of cooperative society is taxable. If it
No,
is, then what type of income?
the income of the cooperative society is not taxable, but income of the cooperative society is deductible under section 80P of the Income Tax Act.
Okay. Okay. Another question is will rehabilitation, reconstruction and development fund created will be allowed as deduction or expense, and if it is allowed, whether it will be accounted for above the line or below the line?
It is above the line.
Means it is allowed as a deduction.
Because always there is a it is a calculated on the basis of profit, but it is a charge on profit. It is
Okay,
not
it
an
is
application.
for calculation purpose, it is on the basis of profit, and for presentation purpose and as for a deduction, it is charge against profit.
Charge
Okay.
on it. Yeah.
Can the 1% or 1 crore contribution by multi-state cooperative societies be used to revive sick society?
Yes, yes. It is to be utilized for the improvement of the Sikh societies.
So we directly have to utilize it for the, or we have to
So that
contribute to
fund
some
will be
government fund
managed.
and then they will utilize it.
They will utilize. We cannot utilize on our own
Okay,
because
we
it is
have
to
to
be given
contribute to the government fund
government.
and then they
Government.
will utilize. Okay.
Yes, yes,
Please
yes.
explain the deeming provision for registration of multi-state societies.
Deeming provision is like the previously before the amendment there was no any concept of deeming provision, but as per the amendment law, if suppose the central registrar is failed to communicate to the applicant a refusal of registration within 3 months, then there will be a then it will be treated as if that society has been registered, and the central registrar has to issue the certificate of registration.
Okay. So, C. Ramesh Prabhu sir has mentioned there is a constitutional amendment. So, he mentioned about all the amendments. I just want to ask that, is there amendment in the constitution of type of members or number of members?
No, there is no any such provision in the constitution as such. But
Okay.
now I cannot understand your question. What
The
do you?
question,
Wait. See, there is an amendment
okay, we have
regarding
Prabhu
the
sir with us.
active and non-active members.
Active and
Okay.
non-active. It
In
is
the
given in the constitution.
constitution,
Yes,
it
yes,
has been
yes. It is the
provided
constitution.
that
Yes, it
only
is.
active members can vote and active members can only participate in the board of directors. So
Yeah.
there is a, and who is active member? Active member is a person who gets minimum services or the product purchased. That means there is an economic participation in the business of the society.
Yes,
Oh.
yes, yes.
So the question was about the type of member, like there was a constitution of individual members. So whether a company or another kind of associate can be a member of the multi-state cooperative.
Any person,
Yeah.
a
Any
person
Any
as
person.
defined in the Income Tax Act, it can be an individual, HUF, association of persons, society, a company, all that can be a person. There is no problem.
And the number of members, minimum number of members,
50.
50. There is no amendment in that numbers.
No,
No,
no. 50.
minimum number as per the required as per the provisions required under the registers. See, under the constitution, it has not been provided. It says as prescribed in the act. So,
Okay.
as far as
So right now it is
multi-state is
prescribed
concerned,
50.
minimum members are 50 in one state, and if there are minimum, there has to be two states. That means in each state there should be 50 members.
Okay. So let's wait for a minute if someone is posting its question. Members, do you have any other questions? Whether any type of profits of the cooperative society are disallowable under Section 80P from commercial activity or services provided. So question to you, Sunil sir. Whether any type of profit of the cooperative society are disallowable under Section 80P.
There are so many clauses in Section 80P. Right now, if suppose the society is having a credit business, that means a credit cooperative society, the any income, the whole of such income is deductible under Section 80P 2A1. But if suppose there is a multi-state society who is doing a dairy business, then there is a provision that multi-state cooperative dairy society can be can have a deduction according to the provision section ATP2B. Then what ATP2B talks about the collection of milk from the members and supplying it to the federal society. And if suppose that society is not collecting the milk from the members, they are collecting the milk from the outsiders, or they are not supplying that milk to the federal society, then that deduction will not be available. Likewise, the source will not define the disallowance or allowance of the income, but the definition or the interpretation of the particular sub clause of Section ATP will decide about the deduction under Section, decide about the disallowed about the income. That is the case.
Any other question, members? Please post. So I think it is pretty much clear from your sessions. No further doubts are there. So,
Yeah.
sir, very much thankful to both of you speakers. We have covered a lot of material in a very short span of time. I hope you enjoyed, every member have enjoyed our brainstorming session. Thank you to the speakers for delivering such a wonderful session. And thank you all the members for active participation and patient listening. Good evening to all. Have a good day.
Thank you.
Thank you so much.
Thank you.